Thank you. Thank you. Good morning to all of you. I hope all of you have been keeping yourself safe through these tough times. Hope we all get to our normal ways of living soon. On that note, wishing you all a very happy, safe, healthy, and prosperous 2021. I will break the commentary into two parts. In part one, I will talk about our journey of building a stable, sustainable, and scalable bank. And in part two, I will talk of the quarter performance. As early as 2011, we had envisaged building an institution that was stable, sustainable, and scalable. In line with that strategy, we started diversifying our portfolio right from 2011. Until 2011, we were only doing microfinance. In 2011, we started our used commercial vehicle financing. In 2013, we started the cross-sell of small ticket LAP of 50,000 to 5 lakhs, MLAP as we call it, to the top end of our MFI customers. In 2015, we expanded this offering to 5 to 10 lakh rupees of business loans secured against house property. In 17, after converting into a bank, we expanded this offering further from 10 to 25 lakhs of business loan, again secured by house property. In 18, we commenced working capital loans and MSME loans and term loans to NBFCs. All of this has helped build stability by growing our secured book from 46% in 2015 to about 79% by December 2020. During this period of building stability, we focused on sustaining our margins as we could offset the drop in yields arising out of changing product mix with an improvement in cost of funds and operating cost. We have tried to provide this perspective in slides 4 and 5 of the presentation. Also, with the worst hopefully behind us, if we manage to contain the credit cost for the year at about 2.5%, I think it will be a very good barometer to the sustainability of the bank even during such tough times. Now coming to the performance for the quarter. Let me first talk on the industry a little bit. In microfinance, from the customer side, we are just beginning to see the first signs of some sort of stability in the repayment patterns. Many of the customers who had migrated back to their villages or back to their hometowns have started coming back as the cities and towns have opened up back again. Collection efficiencies are more or less stabilizing. We see the X-bucket efficiency nearing the pre-COVID level. However, there is a part of the portfolio which has remained unpaid, and this is likely to lead to elevated NPAs and losses for the microfinance sector. The events in Assam is a cause of concern too, and there are sector-level discussions on how do we handle the crisis arising out of Assam. In small business loan, where customers are engaged in running very, very small businesses, they were totally out of business when there was a total lockdown. But as economy and life opened up, these small businesses were the quickest to recover. These are businesses which are run by the owner themselves, and as soon as the government rules permitted, they were back to business to earn their livelihoods. This is fully reflected in our portfolio also, where our expected collection efficiency was very close to pre-COVID level almost from the first month of September, and the build-up of NPA is very marginal in this segment. In the used commercial vehicle finance, it's taken time for the operators to get back to their normal levels of movement. We see that for light and small vehicles, the time to recovery was about 2 to 3 months, and we see that more or less in December, they are back to normal. As far as heavy commercial vehicles are concerned, the movement of normalization for the goods segment was very strong, whereas the passenger segment was still affected, and it might take a few more months for that to come back to normal. Now let me get into the performance of our bank for the third quarter. In Q3, the focus was largely on collections. In December 20, the X-bucket collections across all products have reached the pre-COVID levels of efficiency. This is a very significant achievement because what this means is that we are not going to be seeing additional stress being built up on a monthly basis. The challenge now before the team is in terms of how do we handle the accounts which have already moved into NPA on a pro forma basis as of December, and also how do we try and resolve or contain accounts which are in the 1 to 90 DPD. While Q3 was an important quarter in collection, Q4 would continue to be an equally important quarter for collection. Once we get Q4 behind us, we expect to revert to business as usual from the first quarter of next year. In Q3, we disbursed around 2,500 crores, which is about 80% of our pre-COVID levels, and hopefully this should increase for the fourth quarter. As of December, our advances grew by 19% year-on-year, and now about 79% of our advances is secured. Our flagship product, Small Business Loan, continues to show good growth. In terms of asset quality and provisions, we have utilized 113 crores of the 170 crore COVID-related provisions during the quarter, while also further accelerating our provisions as per IRAC norms. This should help in improving our provision coverage ratio over time. Our current PCR on the pro forma basis is about 60%, vis-a-vis 50% in the second quarter. In terms of restructuring, the bank has approved a one-time restructuring of accounts for about rupees 340 crores, which comes to just under 2% of the advances, and most of them are vehicle finance loans. Out of this restructuring which has been approved, about rupees 40 crores has been effected in the system in December, and the rest would get accounted during this quarter. In terms of our liability franchise, our savings account balances grew by 96% year-on-year, and retail term deposits continued its strong growth momentum, growing at 79% year-on-year. Our deposit mobilizations have done well, and we may have to recalibrate our rates to ensure that our LCR moderates to a more comfortable level. This is one factor for our NIMs dropping in Q3. Our focus on DigiBank grows, and we have acquired and onboarded over 1.28 lakh savings account customers through digital and physical channels during the last quarter. Our fintech collaborations have started off well. We are seeing growing interest among fintechs to collaborate with us, and accordingly we have strengthened our API banking. We have launched the online NRI account opening process and the 3-in-1 account. I'm also happy to inform that recently we launched a women-centric savings account product, EVA, which has been well received in the market, while our premium accounts, which are Wings and Elite, continue to grow well. Lastly, we are now live on the point of sale acquiring terminals across Master, Visa and RuPay through our own BIN. This will help build better engagement with retail merchants and improve our current account traction in the process. In terms of leadership front, we have further strengthened our leadership with 2 new hires. Rohit Fatke has joined us to head the mortgages and vehicle finance business. He last worked with Cholamandalam Investment as business head home loans. Rohit has a long career with Chola, having worked for more than 18 years, and previously had handled commercial vehicle finance for them. CB Sebastian is another person who has joined us as EVP Operations. CB has close to 25 years of work experience. Last he was with SBM Bank as COO and Deputy CEO, and prior to that he worked with ICICI Bank for over 14 years, heading the retail operations and services. Raghavan, who handles our microfinance, small business loan and vehicle finance, has gone on a sabbatical for a few months to spend time with his family. Jagdish, who has been handling microfinance and small business loans and earlier reporting to Raghavan, would be reporting to me. Thank you for hearing me out patiently. My colleagues and I would be happy to take any questions from you all. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Renish Harish Bhai Bhuva from ICICI Securities. Please go ahead.
Yeah, hi. Thanks and congrats for the great set of numbers. So just a couple of clarifications. So I'm referring to your, slide number 22 on the pro forma gross NPA numbers. So it says that, the large part of pro forma slippages has actually came from the microfinance book. And given the fact that we don't have any exposure in West Bengal and Assam, can you please just throw some light on, from where this incremental slippages has came from?
Jagdish, can you handle that?
Hi, this is Jagdish. Okay. This is across the board, but the major part happens from the Maharashtra and Punjab.
Okay. And how is the situation now, sir? I mean, whether the collections are improving from December level for the first 20 days of January, or what is the trend now?
Yeah, our expected collections have been improved quite a bit compared to our December. December almost we are at pre-COVID levels of our collection efficiency in the expected. We also seen the considerable level of improvement even in the month of January. And also in the markets that we are operating in Punjab, where the entire industry has been feeling a little bit of stress on the collections, our exposure is almost close to less than 2% of our total portfolio. So we will not have much of impact as far as these states have been concerned.
Okay. And sir, if you can quantify the industry level exposure in these two states and maybe the industry level collection as well would be helpful, sir.
Yeah, the industry level information, generally the MFIN newsletters do give us a good amount of data at the industry level. So, I mean, we can always try and forward that report to you at some point in time.
Got it, sir. And sir, next question is to actually Vasu, sir. So, sir, this X bucket collection efficiency, what it stands for? It is the excluding pro forma numbers?
See, the X bucket collection efficiency that we are talking about, we are talking of, let's say, two important collection efficiency parameters. One is the X bucket. X bucket collection efficiency means the customers who start a month without an overdue. So when I talk of December X bucket efficiency, what I mean is customers who as of 30th November do not have any overdue. Out of that set of customers, for the December billing, how many of them have paid their December billing? That's what we call as X bucket collection efficiency, and there we have given it in our presentation, where you can see that in slide number 21. We have given this particular X bucket data, and that is at the pre-COVID level of February as well as the December 2019 levels. What that means is that all customers who do not have an overdue as of 30th November, their behavior is now back to the normal levels before the COVID levels, which means that we are not building additional stress. The second important thing that you have to look at is in the same page, 21, billing efficiency. Billing efficiency we are given as of for the month of December 2020, where it comes to 88.73% across all the products put together. Billing efficiency in our parlance means the billing for the month of all customers against the collection against that particular billing. So the denominator will include even NPA account billing. So it will include NPA account billing also in the denominator. Numerator, whatever we have collected against the particular month's billing, no overdues or no pre-closure or no collections of the past months are being put into the numerator. Whereas the denominator will include billing of all accounts, live accounts, which includes NPA accounts, pro forma NPA accounts, everything. That's what we mean by billing efficiency, and that's at 88.73, which I think probably is amongst the best in the industry.
Got it. And sir, just last question from my side. Sir, what explains the lower collections in the vehicle portfolio at 82%?
But that's the billing efficiency, so it's actually not low. That's probably a very normal levels of billing efficiency that we see even in the pre-COVID levels. Because in vehicles, normally the X bucket pre-COVID level, the X bucket used to be somewhere in the range of about 80 to 81%. And we used to have about 19% of vehicle finance, which will have some overdue, anywhere between 1 to whatever DPD.
And you expect the same amount of rollback even now, I mean, as compared to pre-COVID levels?
See, that's what I had mentioned in my opening remarks, that, Q4, it's not like, with Q3 we are dusted and done with everything and, everything is back to normal. That's what I had mentioned, that, Q4 would continue to be as serious a collection-focused quarter as Q3 was, because in Q4, our whole challenge is, now what I mentioned, our expected becoming normal means that my additional stress build-up is stopped.
but we still have run up a sharp increase in our NPA in the December quarter. We have seen levels of 4.17, which we have never seen in our history ever before. So that NPA we need to resolve as much as possible, and then the 1 to 90 bucket, which is there as of December end, we need to ensure that we contain that and not allow most of them to slip into the NPA. So that will be the focus. So in terms of bucket-wise rollback efficiency and NPA rollback efficiency, those are the things that will be the focus for this quarter. And I can tell you that the bucket-wise rollback efficiency was obviously the lowest in the month of September, October, and it's been improving month on month from there on. And in December, we are, I wouldn't say at the same pre-COVID level like the X bucket, but we are getting there. Now, Jan, Feb, March, we should try and get the bucket, OD bucket rollback. We should try and get that back to the pre-COVID. Once we do that, then we know that we are finally finished with the COVID issues, and from first quarter we should then hopefully look back to normal business.
Yeah, Ramesh, on Punjab, I think market share is about 1.9% at an industry level. So they have roughly about 4,600 odd crores.
Okay. That's it, sir. That's it from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Pawan Aluwalia from Laburnum Capital. Please go ahead.
Yeah, thanks. Three questions. First, on the VF portion, as you guided, we've done some restructuring. Vasu, since you've been an experienced sort of vehicle financier, are you concerned about the ability of the driver or operator to maintain the quality of the vehicle, to maintain its operability? If you leave a school bus or a truck can just stranded for 6, 12, 15 months, are there, is there an impact on the quality of the asset? Do we have any way to ensure that the asset is being properly maintained so that, we don't see value destruction there, especially in the event that at some point we have to repossess it? Second question on the MFI side, we're seeing a lot of different, the sector certainly become larger and more competitive in the last couple of years. We are seeing a lot of newer players in MFI, some people with large bank balance sheets behind them, really pushing growth pretty aggressively. We've traditionally had a more conservative stance on MFI. Given that you have a lot of new competitors here trying to be very aggressive, what is our approach going to be? Because are we looking at an industry where in the short to medium term you're going to see very aggressive pushing of credit, where players like us really have no choice, either are left with the uncomfortable choice, I should say, of either taking risks that we don't want to take or basically giving up growth significantly? And how do you view that trade-off? I mean, how do you see yourself negotiating that landscape? And thirdly, on the organizational side, you mentioned that Raghavan has taken a sabbatical to spend time with his family. Is it expected that he would return to the bank, or is this really the start of a transition out? And if it is a start of the transition out, if you take the 2-3 key verticals that he was heading, I think you mentioned one of them, what is the transition plan for succession to him in his various areas of domain responsibility? Who will be succeeding them, and do we have a plan in place to make sure they're able to ramp up their responsibilities?
Okay. So can we start off on our vehicle finance? So I'll ask Rohit to talk about that first question.
Hi, Pawan. Hello, am I audible?
Yes, you are.
Yeah. So Pawan, on the VF side, the first question that you asked me is, what is the quality of the asset? So we had done an inspection of all our assets between August and September, and we found that all our assets are in very good condition. So that is one point. The second point you asked me is whether, the people coming in for restructuring, is it good or bad? To be very honest, people who are coming in for restructuring is a very healthy and good sign, because then that customer has the confidence and the capability to restart his vehicle, to redeploy his vehicle and earn, and he's confident about earning income. And that is the reason why he's coming back for restructuring. Actually, I would be very happy if more people would come for restructuring voluntarily, so that they were confident of earning future incomes and restarting their EMI. So these are the two questions I think you asked me about vehicle finance.
Thank you, Rohit. I'll take that question on that microfinance because it's more at a philosophical level. Microfinance is the kind of industry where you can neither love it nor hate it. It's something that you can neither ignore nor embrace fully. And it's been like that for the last 15, 13, 14 years that at least I have been personally involved in that industry. It's been like that. It's been a roller coaster industry. You have some periods of very strong growth, and it looks as if there is no looking back and things like that. And suddenly something happens, and you just kind of feel what are you doing here? I mean, that's the kind of impact that the industry goes through from time to time. So we have always taken a very, very kind of very kind of a prudent position in the industry. Right from 2007 when we started, it's not like some recent philosophy. We always try to be very prudent, and there's a lot of history to microfinance. I mean, it will take us a very long time if we have to really get on into the entire history of microfinance. But I can tell you that when I came into microfinance in 2007, I could really not find any key difference between microfinance and the STPL. I don't know, some of you may be aware, a small ticket personal loan was a big market in India between 1995 to 2005-07. It used to be a very big market, City Corp, and I mean a lot of players are doing that. And then it went burst. So there was a solid bubble burst in 2007-08, and almost every player lost lots of money, and some of them wound up completely in India. So when I came into microfinance in 2007, I was trying my desperate best to try and figure out what's the difference between STPL and microfinance, because here again we are giving small ticket loans which are unsecured. Of course, there's a difference in terms of group, but then we are not doing individual credit assessment, etc. And there was no credit bureau. There was no checking, no credit bureau, no real knowledge of who is borrowing what. And so we started the journey of creating a credit bureau. We couldn't do a bureau of our own, so the industry tied up with one of the credit bureaus, and we worked very closely. I mean, so much of effort has gone in to try and bring some semblance of order and discipline into the microfinance industry, so that it is sustainable and can sustainably grow, benefiting both the borrowers and the companies. But there are always euphoric times when the industry seems to be just kind of moving from strength to strength and pillar to pillar, and that's the time when you see a lot of new players swooping in and wanting to aggressively grow, and then you have a crisis again, then everything slows down. It's been going on like that for a long time. So for our own, from our own perspective, we will continue to do exactly what we have done all these years. We will continue to look for maybe between 15-20% growth, annual growth. We will continue to look for, and we have already created a very large client base. It's over about, active clients are over 2 million, and past clients are over about 3.5 million we have. So we have a large base of nearly about 5 to 6 million clients who have been either with us now or with us in the past. So our focus will continue to remain, how do we work with them, how do we continue to service their requirements, and yes, of course we'll add new clients, but large focus will remain with our existing clients. And we'll continue to be prudent. Our size of the loan still remains, I believe, the lowest in the industry. Our increase in the loan size based on the second cycle, third cycle, I believe is still the lowest in the industry, etc., etc. So we will continue to remain prudent, we'll remain cautious, and we are also doing a lot of work at the industry level. We are part of the MFIN committee. There's a special committee formed by MFIN to deal with the sectoral issues. There's a committee created by IBA for enabling the banks, mainstream banks and the MFIs to coordinate better. I am part of that committee also. So everywhere at the industry level, we try our best to be part of all the initiatives to see how do we bring some semblance of order and discipline into this system. So that's our stand on microfinance. The third one.
Sorry, Vasu, just to follow up on that, right? Can you get 15 to 20% growth in an environment where you're the lowest ticket size and the lowest increase in the industry? Or are you counting on the fact that given some of these blow-ups we've seen and tighter regulation, that once the RBI and MFIN and all come in and impose tighter rules, some of the indiscipline in the industry will go away. So is it more that you think the industry will rationalize, or do you believe you have a path for growing to 15 to 20%, even if the overall environment remains irrational and you maintain your discipline?
See, the industry goes through this periods of rational and irrational behavior. So right now, the industry, I believe for the next 12 months, I think the industry will become very rational and a lot more prudent than in the last maybe 1 year or 2 years. So it goes through the cycles. As I mentioned, our focus will be largely on our 2 million active and maybe 3.5 million inactive clients, past clients. That's where our focus is going to be. And there, even though I may give the lowest amount, they don't mind it because they've been with me for a long time. There's so much of comfort developed at the operating level, ground level between our staff and the clients. So I have myself been to a lot of meetings, and they keep complaining that our loan size is small compared to others. But they still come back and deal with us because of the comfort that's developed over the last so many years of dealing with us. And third thing is that the industry is at about 2.5 lakh crores, and we are about 3,500 crores. So that gives us a market share of maybe about 1.5%. So I think about 15% growth or 20% growth for us, largely focusing on very large existing clients, may not be that big an issue in the industry. In terms of the last point that you had asked, in terms of Raghavan taking the sabbatical, he should be back in the system shortly. That's what is the thing. He should be back and he can take back whatever he has been handling in the past.
Got it. Thank you.
Thank you.
Thank you. The next question is from the line of Vijay Karpe from Bryanston Investments. Please go ahead.
Thank you for giving this opportunity. My question pertains to collection efficiency. The billing efficiency. What was it in Tamil Nadu, Maharashtra, Karnataka, and Rajasthan?
Vijay, we don't publish that detail at a state level for various other, reasons, mainly from a competitive landscape. But you can safely assume that since a lion's share of our portfolio in microfinance and small business loans is in Tamil Nadu, that's one you take into consideration. Vehicle finance, about 30-40% again is Tamil Nadu. But at a state level, we haven't started giving that breakup, so hope you don't mind.
Okay, my next question pertains to the restructuring part. It was earlier guided to be well below 1.5%. So this has come in at 2%. So what changed so much? And also, majority of this is coming from vehicle finance. So if you look at the restructuring that will be happening on the vehicle finance portfolio, that will come to 7%. So don't you think a 7% number is a little on the higher side?
See, we had initially in the month of September, we had thought that the overall rescheduling request should be around the 1.5% level, but finally it's turned out to be just under 2% level, slightly under 2% level. And as Rohit has mentioned earlier, so we kind of welcome people who wanted the rescheduling because at least it shows that they are still very much committed to the commercial arrangement between us and the borrowers. In terms of used vehicles, in our commercial vehicle portfolio, as you know, it's principally the used vehicle market that we operate in. And so the used vehicle market, our lending rate is also in the range of around 20% plus. And so that product is is a product which will traditionally have a higher level of NPA and a higher level of credit loss, and but also supported by a higher level of yield. So that's that product. The product is like that, and it's structured like that. So I think it's quite par for the course as far as we are able to see, and we do not see any particular concern arising out of that.
Okay, and my last question pertains to the slippages. What are the potential assets that are at risk of slipping into the GNPAs?
So, as I mentioned earlier, that's going to be the challenge for this quarter, right? The 1 to 90 DPD cases, which we started as of 1st January. Now, how much of that we'll be able to hold on and how much will further slip into NPA, that's the whole challenge for this quarter. So, we are not really giving a guidance on that just at this point in time. So, we will please wait till March and we will be able to share the data post-March. But the entire focus this quarter is really going to be exactly that point that you mentioned.
Okay, that's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Nidesh Jain from Investec. Please go ahead.